Hello and welcome to you. Thanks very much for joining today's webinar, hosted by Unifits and moderated by Finextra. My name is Gary Wright. I'm the head of research at Finextra, and along with the panel, who I will introduce to you in a short while, we're here to discuss today's topic: automated testing, the road to evergreen compliance. And I'll cover off what we mean by that and what we're going to cover in a short while. But firstly, I would ask you to contribute to this conversation. We're going to talk about the topic from many different angles. The panelists are going to share their insights and views. And if you have a response to that, if you have a question, a remark, or comment you wish to make, then through the link provided, please do so. And we'll try and sweep those up and introduce them into the conversation. The format is quite straightforward. After introducing the panelists, I'll ask each of them in turn to set the scene with a couple of minutes of contextual background to a discussion we'll have in more depth as the webinar moves into its second phase. And during that phase, we have the opportunity to have a much more deeper dive into the conversation to really tackle some of the issues around automated testing, where we're at today, perhaps where it needs to be tomorrow. And again, please share your thoughts. There is an asset that I'd like to draw your attention to. You can download it. It's called Mastering the Transition to ISO 20022, Strategies for Compliance and Automated Testing in Financial Services, a report that we produced at Finextra in conjunction with Unifits. And I think it's got a great depth of insights and opinion onto the whole topic. Now, what is the topic? Automated testing, the road to evergreen compliance. Well, I think it's fair to say that the industry is constantly evolving, particularly the payment side of the business. And as all these different things evolve, from new payment rails to new initiatives to new regulation and new compliance, uppermost, of course, is ISO 20022, which is a significant challenge and change for the industry. And all of these things have to be rigorously and robustly tested. And one of the things that we're going to debate today is how has that evolved over time? What are some of the challenges with the bank's legacy testing methods? And how sustainable are they if we look at the need to evolve and change at the pace we need to for the outcomes that we're driving, particularly when it comes to ISO and other initiatives? So what pressures are they under? What are some of the decisions that they can think about taking? What are some of the options that they can think about looking at as we move maybe away from the current way of testing into a more automated approach? And then what does that bring us as a benefit? How do we get there? And what does it do for the future in terms of opportunities? And basically, how does the whole of a more automated approach help in the long-term journey to ensuring business compliance, which is uppermost in the priorities of banks? So just a few points for you to consider alongside other points you may already have. And let me introduce and welcome our panel. Firstly, welcome to Paul Thomalla, who's the non-exec director of Unifits. Then we have Alan Hovsepian, who is the architect and distinguished engineer at UBS, and Victor Neff, who is the better payment lead at Accenture based in Switzerland and looking at that region. So between Paul, Alan, and Victor, I think you'll agree we've got quite a good spread of insights and information we're very keen to share with you. So let me start off by asking each of them to share some initial thoughts on the topic. And Paul, I'll ask you to lead, please. Paul.
Well, look, I think this is a topic of our age. If you think about it, there are some 2,000 various clearings or rails, around the world. And, my background has been in creating software for banks to be able to do this. And I can tell you from my experience, the rate determining step of any progress wasn't how cool the payments software was, but it was how well you had the endpoint to be able to connect to the actual clearing in a particular country. And I think it behooves us a lot to sort of take a step back and say, well, hold on, we used to do testing, but it used to be relatively simple. It was, are the 36 characters for the for the address field? Is it alphanumeric? Is the message that I get back a happy message? Is it going to go down a happy flow? And then, at that stage, it was really a IT workforce that were, looking after that. And in 2004, I'm sure many of the audience were around when ISO was launched. And, we had the ISO 20022 book for dummies, which I think, nearly all of us read part of at least. I certainly didn't read it all, but I read quite a bit of it. And the truth of the matter, it was the start of the change. And you see just about every country in the world now, when it brings new rails out, is going to use that rail. And at the moment, there are planned to be, by the end of next year, somewhere in the region of 100. So clearly there's a lot of older type clearings as well, but I think the direction is very clear. And the two things going on, I think, here. One is, at the moment, we kind of are all swept up in the digital change that is happening around our industry. But it's also true to say that when you start to bring ISO into the equation, you're moving from a technology or an IT-based change platform to a business platform where you need the people that are running the business, talking to the customers about the business, trying to talk about how the benefits of ISO can be made. They're the people that are actually having to step in and get involved. And of course, the truth of the matter is, if you want to get more and more, IT people to come and do the testing, there are many offshore people that would be happy to do that. But getting business people, that's really quite tough. You and I, Gary, been in this industry a while, and we know how hard it is to find those guys and how tough they're currently finding it. We also see that central infrastructures like NPP, Australia, are looking at trying to make a tool set that allows their member banks to come on easily. CBUAE have just done the same to have an automated testing environment. But least we forget, testing is not the activity. The activity that we're seeking is to get to a compliance state, and moreover, to stay there. And the issue, therefore, that we have is, how do we make the business people help us focus on the change we want to get with our customers, and how do we get to a compliance? And what we're seeing is, an automated testing environment that allows you to effectively simulate all of the activities, and at the end of it, know whether you are compliant or not. Frankly, it's the goal that's important. It's not how many testers or how much testing you do. It's whether you're compliant and whether you remain compliant. I think that's the heart of the topic, Gary.
Yep. No, thanks, Paul. And you touch on many points that we'll have to address. Clearly, there's a degree of history we should acknowledge, because it's got us to a particular place. And then why is it no longer necessarily fit for purpose if you think that being compliant with regulation is as fundamental as it is now in the world of payments? And as you say, you've got this mix of who's driving this. It used to be almost a CapEx type discussion, and now it's an OpEx type discussion, and now it's a business-led discussion. So several points to pick up on that. So thanks for that intro, Paul. And let's continue along similar lines. And Alan, your thoughts, please.
It's interesting because I feel like large companies are behind small companies on this front. Business-led, it was interesting how you put it that way. It ought to be business-led because it ought to be a recognition that quality and speed to market needs a commitment to quality all the way through the life cycle. And that commitment to quality wasn't there in the past. Or put it another way, it was there in the deep past with the very traditional ways of looking after quality, significant amounts of manual testing, large amounts of documentation, that kind of thing. And it feels like that's where a lot of companies got stuck for a long time. And now we find a push from both sides, both from the IT side and from the business side, to recognize that quality is something that you have to build in from the beginning. and that you have to invest in, but that actually, from a business perspective, it gives you then freedom later to be more sensitive to market changes and sensitive to requirements. As such, it's changed more recently, in my view, and become much more supportive from the business. Not exactly business-led, I would say, but at least business-supported.
That's an interesting point, and certainly we're going to pick up on that, Alan, because I think how it evolves and how you sort of measure the improvements, as you say, the laboured processes which may get you a certain output of quality needs to be looked at again, because clearly you need to be more agile in approach and you need the output to be of a higher quality, but you don't achieve it on the old ways of doing things. So the way that technology comes into that, the internal discussion, for example, and other things we draw out. So thank you for that. And to close off this first section and set the scene, then Victor, your thoughts, please.
Yes, maybe I can jump on the 2 points from Paul and Ellen. So basically, I'm 15 years in the financial services industry, and 10 out of those as a consultant. And I've done actually waterfall process to agile, the transition from waterfall-led projects to agile projects. And Ellen, I think, mentioned it already. It's the higher speed. It's the faster time to market. And with conventional methods, it's very difficult to keep up the pace. And another point what I want to make to point out is actually the lack of resources. ISO, when was it introduced? 2004, I think Paul mentioned it. And then 2008, SEPA jumped on that. Then we had later SEPA Inst with 2018, just to complete the whole history. And in 2016, I think Switzerland, at least a bigger financial area, also moved towards ISO 20022. And what I saw is actually that immediately the resources, we need tester. So we need tester which understand payment. We need tester not only to understand payment, but also to understand ISO 20022. And moving on in the history, now we have the instant payment implementation in Switzerland, the regulatory requirement by the EU Parliament as well for instant payment in Europe. And there is a lack of resources. And now there is you need to steer this a bit. And what can you do if you have lack of resources? You try to leverage the knowledge. And for that, actually, you need to invest in automation.
Okay, well, there's a light at the end of the tunnel, and it isn't a train, because automation will be a solution. I still want to pick up on some of the reasons why we got to this stage, and we'll do that as we go into the next session. So that sets the scene for everybody that's with us to understand some of the thoughts and the backgrounds. I suppose the message really that comes out in some ways is we've been doing this for a long time, since 2004. And in the way that payments has evolved, changed, and gone global with new rails and new timescales for payments being made, i.e. instant and fast, yet we're still dealing with a testing infrastructure that doesn't seem to keep pace with that. So that sets the scene. So Paul, can I come back to you? Because I think we do need to spend a little bit more time on this legacy infrastructure. What is it that actually we're dealing with when it comes down to the disparate way in which testing is undertaken, perhaps sometimes across business units and silos, sometimes because it's heavily manual intensive. But how would you sort of summarize what many parts of the industry are still wrestling with when it comes to the sort of the generic or very tailored way in which testing takes place? Paul?
Yeah, I think the thing is, it's very easy from a payments point of view to think about payments as being all there is within the bank. And in fact, much that's a shame, the truth of the matter is the bank is doing an awful lot of other things. And, if you throw some sort of dates around, they start to give some, context here. BACS was introduced in 1968. That context, at that time, there was no concept of what we would now call, immediate or real time. And, there was effectively banking hours were, 10 o'clock to 4 o'clock. It was a very different world. And that very different world meant that the many aspects inside of a bank were doing many different things and effectively had their own regimes or silos to work through. And while we say ISO 20022 and it can do wonderful things and does do wonderful things, it kind of does affect every bit of the bank. And trying to get that change to happen all at the same time is actually very hard for a bank to get its brain around. The other side of it, I think, is that many of the payment systems that are around today are relatively old. Maybe not as old as 68, but 25, 20 years. It certainly is around that time, and they were made using legacy systems, very cool for their day, but not really trying to do what we need to do now. And so when I was talking about the interchange of going digital and going from IT to business, I think the two things are inextricably linked. So what you have is not only a series of different silos inside the banking house, you also have different states of progress. They could be relatively modern, they could be extremely old. Each has their own set of testing regimes, their own rigs, their own way of doing things, which is all very well and good. But the issue that you have with payments is it's external. If you want to do a separate inst, it is not your bank that chooses. It is the external, the EBA that wrote the rule book says this is how it's got to be done, and therefore you got to test it. So I think we get into a situation where there are many stages of legacy, many ways of doing it inside of the bank, but generally the rate determining step, because regulators say it's this date, you need to be, you need to be compliant by, you end up having the pushback through payments to drive the change, and therefore to change some of these legacy systems into these more modern and business-led systems. And least we forget, I'm sure we all know people in the industry who are absolutely rushed off their feet trying to explain the business opportunity at one day to all of their customers and the other day internally, and then they try and have their day job as well. So I think we have very difficult regime if we have the status quo, which is just throwing more people at it, which at some point I believe we're very close to. And I think that will start to hurt a lot of banks very badly.
Thanks, Paul. Interesting, because clearly it seems to have to get to a position of almost essential change or repair. So I suppose, why now maybe is this such a pertinent conversation, just to finish up on that point, and why now is it so important, given that we've been struggling over the years to get by with knowledge and labor intensive methods? Why so important now?
Well, I think the key thing is, any bank, pick a bank. I don't want to pick on Alan's bank for a second, but any bank, they will have a series of plans of what they want to do, how they want to do it, how they want to upgrade the back office, how they want to update, whatever it is they are seeking to do. And that's great. But if the regulator says by September 2025, you must do this, then you have a different set of priorities. And unfortunately, or fortunately, depending on your point of view, if you want to seek the change to happen, that's what regulators have done. They've said, I want this by this time. And so instead of having the overall strategy designed internally and the timeframes about what change needs to happen, regulators have often said, with clearings, you need to adopt this rail by this time. Your problem, go away and fix. And that doesn't always help a bank.
Well, Alan, seeing as you've been targeted as a bank representative, what's your thoughts on Paul's comments there?
I mean, simplistically, I think Paul just hit a lot of nails on the head with what he was saying. Just to go through a few of them, where he said, why now, for example? And I think the question of why now comes very much down to we haven't been struggling for a long time. And Paul also mentioned, the way banks do things have changed a lot over time. We now have significant expectations from our clients that didn't used to be there, for high uptimes, for online banking systems, payments that travel in 2 hours or 2 minutes and not days. In the past, if your banking system was slow or out of action even for a few hours, no customer would even notice. The expectation was a payment might take a day, a check might take a week. In the last 10 to 20 years, all of that has changed. The expectations have gone up from the regulator, the expectations have gone up from the client, and yet our internal processes haven't changed. And what Paul said, we have a lot of different things a bank does. It's not just payment, and all of these other systems are siloed, and that's absolutely right. And yet they depend on each other. And some of them are modern and well tested, and some of them are old and slow to change. But yet they depend on each other. Your payment system depends on your accounting system, your general ledger system, your reporting system, etc. And if one of those pieces isn't working, then the entire system can either come to a crashing halt or at least slow down significantly. So you've got this problem that would never have shown up 10, 20 years ago. Client at least would never have noticed it. You'd have had plenty of time to move more slowly to the market, to test more slowly if there was a problem, because quality, which was considered good for the time, was good enough for the time. If a system was slow or out of action, no client would notice it for 3 hours. And that's all changed. And yet we struggled on with the same processes, the same silos, the same separated systems. And bit by bit, we've become more and more expensive to run, less and less agile. That's the way we've met the client expectation. That's the way we've just about scraped the high up times, just about scraped the meeting the regulatory needs, right? Throw more people at it, and more people, and yet more people. And then suddenly you ask yourself, why does a bank cost so much on its IT and cost so much to run? We should have taken this journey, and I say we collectively, not just my bank, should have taken this journey 20 years ago. And it's just got to the point where it's impossible now to continue throwing more bodies of problem to actually advance. And ultimately, that's the answer of why now. The pain got too much. That should have been 10, 20 years ago. And really, you could look at it holistically. You could say the systems ought to become more integrated, not codependent, but loosely coupled. But the integration should be considered. The testability should be considered, and the dynamicism, the flexibility should be considered. And yet, in many areas, we're stuck with a legacy system that is very hard to move it from state A, the past, to state B, flexible and easily testable. And this brings a lot of challenges that we've faced in my bank, many of which are amenable to automation testing. And some of which aren't, but at least by freeing up capacity, by bringing in automation where you can, you have a few more warm bodies to throw at the places you can't.
So Alan, I want to pick up on that automation, because I think we've got to push towards what that looks like and how it lends itself into the structure. But Victor, clearly a lot of discussions there on where the industry is at the moment. It's stuck, so you may have a comment to make on that. But also your thoughts on the why now, and are you seeing that? Because it seems to me maybe a naive question, but everybody's modernizing their infrastructure. Everybody's trying to be smarter in terms of moving to cloud and more agile, and yet the complexity of testing seems to be dragging its weight behind everything else. Victor.
Yes, I mean, what I would like quickly, not to start with a history lesson again, but I would just like to emphasize that I'm not 20, 30 years in the industry. Ellen and Paul are. But anyway, what I noticed, although I'm a shorter period in the industry and in the technology area, I noticed that the faster pace actually, and it starts actually not only, I mean, it's not only related to the faster pace, it's just the amount of regulatory requirements which are thrown towards the banks. We have now the instant payments in Europe. We have next year the hybrid addresses. And this brings me also to your point, Gary, because the address data, for example, it's affecting the end-to-end value chain in any bank. And Ellen mentioned it, reporting system, payment system, input, so all the client-facing channels, you need to adopt it. And now we are not just only testing a payment system, we are testing the whole bank, just because we want to enforce structured addresses. And because we cannot enforce structured addresses, we made, or the industry has come up with the ITRI model we call hybrid addresses, right? So we don't get the full goal. We have the hybrid address and we need to test end to end. And now the question, or I try to answer you, why now? The amount of changes is huge, and it's a good time to invest and to optimize your, let's say, your legacy approach of testing. And what I also see some in the projects, we have the address project, we have the instant payment project, we have the CBPR Plus project, and all of them are managed in silos. And potentially they don't talk to each other, but the best way would be that they talk to each other and then they come up with a common approach, because it can be leveraged across different projects.
So, Victor, when you're talking to banks wearing your Accenture hat, I mean, what starts the conversation about actually legacy needs to change, automation exists? How do you drive that conversation, and what reaction do you get when you tell them actually it's no longer fit for purpose, which they may or may not realize, and they may or may not want to change? Victor?
They say usually, why should we change? It has worked so far. So this is, I get it like 80%, I would say, from the responses, or also that don't test with what some banks do. They also derive or copy productive data into test environment, and then they use this as a test. So it's a bit like a blind shot. They try to nail the test case, but the quality of the test is only as good as the test data is, right? So this is like the two main approach. So they have old scripts, potentially, if there are automations. They have manpower, as mentioned by Ellen, and or they use productive data. And I try actually just to lay out, with the what if situation. So you need to implement instant payment. In instant payment, it's not fire and forget payment. You need to have some simulations. I think Paul mentioned it also, that there are payment infrastructures worldwide. They started to provide also some test data, so responding stuff and so on. But imagine you're in a scheme or in a location where you don't get feedback. So you need to provide already some mocks or some automations to respond to instant payment. Because when you send a PAX 8 to the market, which is the clearing and settlement message for a outbound payment, you expect a PAX 2, which is just acknowledgement or the confirmation that it can be credited on the creditor agent side. You expect that this is coming, and if you don't get this message, you cannot complete your test cases. And this is just with this simple example, sometimes it makes click, and then people are just and listening. What are the options? And the options are quite big. You can start with simple mocks, you custom build that, or you can take nowadays we have different providers. One of those would be Unifits, and or you find another approach. But you need to move, and you need to aggregate and to talk to each other.
Well, let's go back to you then, Paul, because obviously you started the conversation with the legacy and the disparate way of...
And maybe just to mention as well, at the end, the bank has some automated approach because
So I think, Gary, you're going to ask me to sort of follow up on that, is that?
Yeah, sorry, we just had a slight technical hitch there. But yeah, follow up on that, because we've got to move forward now. We've got to push it on to automated testing. I suppose, which bits of the infrastructure do you automate and test, and how do you blend old into new and move this forward, Paul?
I think, look, I mean, there's a place for every type of testing. Let's not, fool ourselves. There is a series of testing that needs to go on for a screen, series of testing that needs to go on for a series of message returns, as Victor pointed out. But I would argue at the moment, the rate determining step of acceptance of change actually is at the level of the rails or the clearings. And the irony of this in many ways is there's a set of known rules. There's a set of use cases. There's a set of rules that go through the rule book that say you need to do this. This message follows this message. This knowledge requires this message, et cetera, et cetera. And in fact, that's something that can be simulated. And that's what we have done. And we've, worked with, several banks to make sure that that happens. So we're not saying that we can test everything, and we're not saying that you should stop your generic testing systems. But what we are saying is there are things that you can put to bed. And those things to put to bed, Separinst as an example, you can test that clearing and know that it is in fact a compliant series of tests. And if you want to change it, if you want to test it tomorrow, you want to test it the day after, you can. And so what you can do is you can make some parts of this difficult testing world into a relatively easy process. And once you have done that process, you can go on and do the rest of the things that you need to do in the back office and what have you. But actually, if the rate determining step is getting the rail compliant, then emulating and simulating the automation of that rail is the place to start. And that's where we've worked with, our member banks to help them get to that state. Because if you haven't got that, it doesn't matter whether you have the back office, you can't play. And so, the ISO is everywhere, but it's everywhere mostly at the clearings and rails right now, and there are timescales behind it. So we're saying, let's make sure that we can test and simulate the clearing against the rule book and the use cases, and then you're compliant. And any change that happens in 18 months' time or a year's time, we've already done the groundwork. Here's the next level of incremental work to keep you what I would call as evergreen. So you can focus on the change and you can focus on the benefits of the change internally and for your clients.
So there's two questions, one for you, Paul, and then one for Alan. But for you, Paul, why isn't that simply happening now as it should do, given that this tech is out there and people do realize that actually with the increase in schemes globally that are fast and demanding, you should be moving towards this?
I think, to be fair, Gary, I wouldn't say it was relatively new. We've been doing it for over 10 years now. The truth of the matter is, in the payments industry, the testing and the rails piece is a bit of a bit, and it's a bit of the big thing that is the bank. And so it's really trying to get it on the table that there are different ways of doing things rather than just throwing people at it. And, we are trying to get that message out, and we're working, with Victor and Alan to try and get some of these things out. The truth of the matter, though, is, to be fair, we don't do it all. We just do the clearing bit. We just happen to do that very well, and trying to explain that against the backdrop of all the people that do testing out in the industry, which is important, but is not critical, in my opinion, for this part of the testing. It's pretty hard to see the wood for the trees, and that's what we're trying to get across. That when you're talking about rails, when you're talking about clearings, there is a much better way of doing it.
So let me go to the question to Alan, because obviously you've got the experience of having been through a transition, and you know, any kind of solution, Unifits or someone on those lines, is probably clumsily put, but a subset of a big integrated testing environment. So how have you approached the recognition that you must have had an internal struggle or two to persuade people that this element of the testing is beneficial from the automation it provides and the scripts it provides to the whole thing? How did you bring it all in, Alan? Okay, well, I think we may just have lost in there for a moment. But if I go back to you, Victor, okay, you said obviously from a similar point of view, in that, as you said, you've got the whole infrastructure to test, and then you've got various ways in which you can improve them, because you can't do it all. So from the point of view of what Paul was picking up on, how do you get this message across, and how do you get elements of this to start to improve, recognizing the automation is a benefit? I suppose the other question that spins off this, are we seeing this as a challenge to clumsy ways in which we do things today, or a real opportunity, an investment that pays back dividends over a year or less? Victor?
Yeah, I would say it can be seen as a chance to do it and to invest, and the benefits are long-term for sure. The point is actually you start. So it depends a bit on the situation of the financial institution, whether you have some capabilities in automation or not. And if you don't have it, you know, then the return on invest it's much far earlier. But in the you invest basically in the quality of the product and the customer experience at the end. And you start actually by, I give you an example, maybe we can pick up the Unifits, because Unifits is also the main driver for this call, but we can so if the bank doesn't have any automation, you go, for example, and pick then the Unifits solution. It's, I would say, to some degree, plug and play with some customization. And then you have like a good platform you can test. And the benefit out of that is, in the long run, because we have every year standard releases, you need to test. Sometimes you have open heart operations. You change some bigger stuff, sometimes only small stuff, and you add your regression test set. And for example, if you have a framework or a product like Unifits, then actually you have every test case you do is a potential regression test case. And if you do changes, you just run the regression test set. If you have agile sprints on weekly or on bi-weekly basis, you just run the regression test set. And I think this is the immense benefit of having automations at all. Maybe also the negative side, you need people to operate and understand whatever solution you have in place. But you don't need 50 people to run regressions. You need maybe 2 or 3 to understand the stuff. And then, of course, you have testers which use it. So this is, and maybe just to add at the end of my sentence, you can have one solution or you can have bit solution. I see this as a commodity actually. Why should the bank invest and invent the wheel again if there are like solutions in place which you can just reuse? I think you use a bit of that, and then maybe you custom build some around and make the integration and reuse commodity, and then you get actually your best testing automation strategy, no matter whether it's payment or securities trading or whatever.
I think that's a fair point, Victor. I'd just like to add the point that, if you wouldn't mind, Gary. So we think that, using the automation environment saves you about 80% of the workload. So Victor's numbers were thereabout, actually. But so we think that just in the testing of the clearing, you save 80% of the resources. Now, over the life cycle of a clearing, you're probably going to get 5-6 iterations over 10, 15 years. Well, if you save 80% compound, that's an awful lot of savings, not just in the near term, in the long term as well. And I think compliance, as opposed to testing, is the story here. Nobody really wants to do testing. They have to do testing, but it is about getting to a compliant state and staying there. I think is the real goal.
And if I may just add, Gary, then if we are already in an open discussion, I think Paul, you're 100% right, and I can confirm whether it's 80 or 75%, but it's the benefit is huge.
Yeah.
And what I want to point out is, nevertheless, everybody needs to be smart. Dying in perfection, it's not possible. And sometimes it's also meant to be that the test case is done not automatically, but manually. Or, I would always, when we do test cases or test strategies, we actually say 80-20 rule or 90-10 rule. So you have some stuff, the complex stuff, but the complex stuff you can also do in the later stage when everything is integrated and you do the nitty-gritty test cases with user acceptance tests. And so they're also happy they find a defect and we did not test everything up front and we have a perfect solution.
So, Alan, it's time I brought you into this because you're the bank in the room. You're the bank representative. You've been through this change.
I'm bank,
so
and
there was a slight question, maybe just touch on singularly, is about how you got this accepted within the bank, the need to introduce automation, and where does it fit in the overall scheme? That might be just an interesting point to share. Let's do that first, but then also, where do we start to see the benefits? We're going to shift this dial because we have to, and maybe the regulators could do more or not, discussion. But how do we then, in addition to get it approved and launched, how do you start to see the benefits coming out? What's the output, the quality of output, and the time savings, those kind of factors that you look for as the benefit of automation?
That's a very good question. It's quite a slow journey, and I think you need to have the buy-in of your direct management and your direct business to understand that this is not an upfront investment of millions that will pay back millions down the line. This is an upfront investment of 5%, 10% on anything you would otherwise be doing, so that whenever you touch your code base, your legacy, your systems, you add a little bit of quality. And I say quality, not testing, because like you said, the testing isn't the end in itself. It's the quality that we want, right? So one of the biggest things that you need to do is jump on the fact that quality suffers, or jump on the fact that cost suffers with the business, and use that as your leverage to say, okay, look, you don't want us to spend so much, or you don't want us to have as many failures in production or what have you. There are solutions to that. They're common solutions to that. They don't come for free, but they also don't need a whole load of upfront investment. They need continuous regular investment. And you need to sort of bring your business around like that to say, look, ultimately, if you hold the purse strings, you can tell me not to do this, but sooner or later, you're going to either complain about my costs or my quality. And you probably already are. You're probably not having this conversation because everything is perfect as it is. So that's the leverage, that's the tool that you have to push on. But you need to be very careful not to scare them, because I remember the first time I introduced testing was to a hedge fund. And the question constantly came back, well, how am I going to continue bringing business functionality in the meantime? How much is it going to cost? How can you prove to me that it'll pay itself back? And the answer is, I'm not going to prove to you that it'll pay itself back. I'm going to prove to you that it'll increase your quality. It'll increase my speed to market, right? And I can't prove it to you up front. You essentially have to trust me. But what I can say is, for a relatively small investment, bit by bit, I'll take you on that journey, and you won't have spent tens of millions before you see, oh, it's beginning to help. I noticed in the chat window, somebody had asked the question, and let me see it exactly, where do you begin with an easy test or whatnot? And that's exactly the right question to ask. Because as well as there being an 80-20 rule in terms of ideally how many tests would you like to automate, there's also an 80-20 rule in terms of how much value do you get from a single test. To take an example, if I have a fully manually tested system and I built one single test case, one end-to-end happy path, just one, and I can run that regularly and constantly and fast, and I'm not just saying, oh, look, a human being said something went in and something came out, but all along the way, a pane one came in, my cash reservation worked, my decisions that I made along the way were the ones I expected, my booking came out correct, etc., all the way out to the market and back. Just one. How much does that cost for you to do, including the first investment in your platform? It can be relatively cheap. It could be, if you were really building something just as a one test out of open source parts, it could be even, a few thousand and one good developer. Or if you want to really build your platform out, and that one test is also to build your platform out, and you're not yet ready, for example, to invest in Unifits because you haven't yet convinced your business that that the investment is worthwhile. Let's call it 20,000, 50,000, something like that. But what does that one single test do for you? It ensures that every step of your happy path is tested regularly. And you can say, okay, right, that was my happy path for, let's say, for example, just my payment system. But I know that where a lot of my problems lies on the interfaces. So now I'll build a second version of that, which tests all the way for example, my e-banking, all the way to my market gateway. And I'll go down and check if I can into my accounting systems and my position keeping systems. Did it actually work? Not just did I get a reply, but did it actually work? And now suddenly a lot of my interfaces are somewhat protected because let's face it, that happy path is 80% of what happens with your payments or with whatever the system is you're testing, right? And you think that doesn't add a lot of value, but just that, you'd be surprised by how many times you want to release your new code base and you run 1 or 2 or 5 happy paths and you realize even one of them isn't working. And then you can build on that and you can say, okay, what's my most common error what's the most horrible thing that happened to me in production in the last year? Or what's the bug I most often find myself, looking back at yet again, I have a problem in this space. And again, a lot of times systems have that. There's often some pain points. So then you'd say, okay, now I'll add a few tests for that pain point, even just 1, 2, 3 tests in that pain point. And before you know it, you've been doing this for a year and you've captured a handful of happy path tests. You've captured some tests around some of your ugliest, most repeating pain points. And already you can start showing to your business or your bosses, look, our quality went up, sorry. Our quality went up slightly. Our reactivity, I have fewer problems, therefore I can afford to release a bit more often, or maybe my release cycle just takes a little bit less time. And so with this investment that was relatively small, I'm already showing, because of the 80-20 rule, some hopefully fairly noticeable benefits. And with every step that you take along that road, the business starts to notice more and more that the quality is improving. When you go from this 5% right up to 80%, where the 80-20 rule of Victor, of course, the benefits start to get more and more expensive and less visible. But hopefully long before you've got to that point, the culture is in place.
Alan, that's very powerfully put. So you've covered off a lot of those points, and we tend to look at these things as cost efficiencies and financial savings, but in a world where the reputation of the organization is paramount and the quality of the testing has to be essential, and that quality can certainly eliminate risk and duplication and error, then you get benefits all round. Victor, your thoughts on some of the points that Alan made there?
Yeah, I want actually to mention or to emphasize with the automation capabilities, which Alan explained. Slowly you start building up the capabilities. And Alan mentioned, it's good that he mentioned happy path. But I can tell you the happy path usually works in production. What is not working is the edge cases which you did not test because you did not expect them. And with the increased automation or with the capabilities you have, you can also start to test, I would say, negative test cases. What happens if this is thrown at the system? What happens if this payment is come? What happens if this channel tries to initiate the payment, and so on? And this is not possible with 20 testers. It's possible only if you have automation. And we, in our projects at least, we always start or try to leverage those testing capabilities and to even test the not possible stuff, because the not possible can happen in production, and I have seen it several times already in different banks. And this brings me now to maybe a last point. I would even say maybe testing will change with generative AI in the future. Not sure whether Unifits is also exploring in this direction, but just the amount of possible test cases to leverage it or to streamline it down to realistic test cases with realistic data and realistic pattern. I think Gen AI can bring also massive value for the testing and also to any payment migration, whether it's ISO 20 or 22 or whatever next standard is around the corner.
Don't do that, Victor. Don't do that.
So Paul, 2 points really, because we're going into the last 6 or 7 minutes of this session, and I like to think that we sort of turn full circle from talking about the disparate way in which things are still happening today, to quote you, Victor, the art of the possible, and clearly Alan's insightful point there. So from your point of view, I suppose, Paul, how do you now see this beginning to shift forward? Because I think one of the messages that comes out very clearly here is that this is really future-proofing, this is really opportunistic for you, and you've got to look at the business case, perhaps not from the traditional way of doing it, but from the quality and the assurance you get from it, the testing and the compliance side. And then the other point is, where do you see the regulators in all of this? Because are they doing enough to help the industry drive the fact that there are these new ways of automation and being realistic in what they can expect within the timescales they impose? Paul?
Gosh, first of all, I'll throw back to a lot of the things that Alan said. And by the way, I don't get to talk to many many engineers in the way that Alan's talked about this. But the truth of the matter is, what we're not trying to fix the entire testing world. We're trying to test and make sure that you are a compliant bank with the clearing side of what needs to be done. And that's the bit that we look through all the use cases. And yes, we're working with AI, but the truth of the matter is, the bit that goes external, that's the piece that we emulate and make sure that it works, and you can test it every day if you like. So I think that's the place for me to start, because that's the place that you touch the external world. And I'm sorry, Gary, I can't remember the last point that you made.
The other point really was around the regulators here, because they set timescales and sorry, pick up on the point, Paul.
So I think it's interesting if you backtrack from the regulators by and large are pressured by the central bank, that are pressured by Treasury or the finance committee for a country. And the country wants to do something. They want to make change happen. They want to bring immediate payments. They tell the central bank they have to do it. They tell the regulator, and that chain may be a little bit loose, but there are layers of that come through. I think the angle is, are the regulators saying, well, I'm in a political race and it needs to be done in 2 years irrespective, and just go fix it? I personally believe in the work that we've done with AussieNet and CBUAE, there have been some clever ways of thinking about it, which is to say, as we're trying to make these things happen, we'll work to automate that clearing and have a regime that you can test against at the same time. Now, you have to forward think that, and those two examples have certainly done that. So I think it's more generally the infrastructure or the central bank. But I think there is a body of work there that should be saying, hey, how can I help my member banks test this automatically? And we have worked with two in particular that I've just mentioned it, who were forward thinking enough to do exactly that. And Victor's organization was very heavily involved with CBUAE to make sure that happened. So I think there is forward thinking here. I do personally believe that the regulators could perhaps do with a little education of the consequences of some of the things they make choices on. That's about as subtle as I can get, I think. But there is a way, I think, to work with the central bank and their infrastructures to help the member banks get there an awful lot quicker.
Well, thanks for that, Paul. And indeed, thanks to everybody. We're coming to the final minute or two of the session. We titled the session Automated Testing, the Road to Evergreen Compliance. I think personally that we're very much ending the discussion on that path. And hopefully we've taken you through a bit of a history lesson and a journey and the growth of payments and ISO and why testing needs to be reimagined. And it can be, and it should be. And now's the time to do that. So thanks to everybody for joining us. Thank you, Victor. Thank you, Alan. And Paul, thank you. A final word from you, Paul, perhaps?
I think you can't fix the world in one go, but I think Alan gave an extremely powerful way of thinking about how to get going. My view is, getting evergreen with your external piece is probably the most important thing that you can do. And hopefully we can help you do that.
Thanks very much. Thanks again to everybody for joining us. And I'm going to sign off the session now, and do enjoy the rest of your day. Thanks very much for joining us.